Hey, what's going on everyone? It's Griffin here, and in today's video, we're going to be going over an update on two stocks that I hold in my personal portfolios. These are companies that both recently reported their Q2 earnings, which obviously has an impact on the short-term price movements of both of their respective stocks. And so I basically just wanted to go over this information with all of you so that I could share my thoughts on the matter. Let's just get right into it, and as always, make sure to smash the like button if you enjoyed today's video. It takes me a lot of time to put these together, so a like goes a long way. And also, if you're new to stock market investing, make sure to check out the links down below to resources I use and recommend. You can get some free money for opening and funding a brokerage account. All right, so the first stock that we'll be covering is Amazon, ticker symbol AMZN. And this is a company that, despite massive levels of growth that we've been seeing over the past couple of quarters, has actually sort of struggled to retain a lot of the gains that the stock has managed to put on over this period of time. And by the way, of course, I'm aware of the fact that on a per share basis, Amazon stock is quite pricey. And so in the past, some viewers had commented that when I speak about Amazon stock, it becomes somewhat unrelatable because for them, they simply cannot allocate that amount of capital to one single share of an individual company. And that's completely fair. With that said, do keep in mind that, for example, recently Wealthsimple Trade has introduced fractional trading. It is quite pricey also at 1.5% conversion fee on American listed positions for both a buy and sell order, but it is what it is, and at least that is an option available. Otherwise, you can just save up over time to buy a share of Amazon stock in US dollars. If we take a look at Amazon's stock chart though, we can see this phenomenon I was speaking about firsthand, where the stock has been repeatedly gaining and then losing value to a point where now the stock has almost shed off the entirety of the 16% gain that it saw from June through to July. Now, personally, I don't care whatsoever about short-term price movements of Amazon stock. I really don't. In fact, I would even welcome this type of shorter term sell-off because I see my own investment in this company on a minimum 10-year investment horizon. I truly believe it's one of the best companies on the planet and that you can hold in your portfolio if considering you will be holding it for a long period of time, as I just think they're going to continue innovating on a monumental level and expanding their reach in multiple different industries. And Amazon happens to have just released their Q2 earnings right at the end of July, so around 2 weeks ago, and since then it's shed off around 10% in market value, which for a company like this is significant. So I did some digging into the earnings report to try and uncover what really is going wrong here and whether or not, as an investor, you should be worried about the state of the company right now. So essentially, there are two main reasons as to why Amazon stock has been tumbling since earnings. The first reason being that the company didn't actually hit revenue estimates, pretty much just meaning though that the estimates that Wall Street set out for the company this quarter ended up falling short. And if history has anything to say about that, in the short term, sure, this can have an impact on the market price as we're seeing right now with Amazon stock, but on a larger scale, this really doesn't matter in the big picture if the company just continues to thrive from a financial standpoint. The second and more prominent reason though is that Amazon's management did speak in this earnings release about expected slower sales growth in the third quarter of the year, falling from roughly 20%, which was expected, to now an expected 10 to 16% for Q3, but realistically, 10 to 16% is still fantastic growth in a single quarter. So let's now actually dig into the Q2 earnings statement for Amazon. First off, Amazon posted sales of $113.1 billion, representing growth of 27% year over year, and also making it a record second quarter for the company. There aren't too many companies that can ever claim to have generated over $100 billion in one single quarter, and to think that this is having quote unquote missed estimates is pretty ridiculous. And from a net income standpoint, Amazon reported $7.8 billion for the quarter, which happens to be up roughly 50% year over year from $5.2 billion in Q2 2020, which, let's remember, was at the peak of quarantine and the pandemic in North America, where you would think more individuals were purchasing from online sources. A couple of other interesting elements from this past quarter: the company reported 87% growth in their advertising services to $7.9 billion, which definitely is not an amount to be ignored, and that's massive considering it's roughly 7% of the quarter's total revenues. And of course, we can't speak about Amazon without referencing Amazon Web Services, AWS for short, which is its cloud computing segment, where revenues grew by 37% year over year to now $14.81 billion. There's a ton more that we could speak about from this earnings release because Amazon is just spread out in so many different areas, but the main thing that I really look for here is growth in the company's operations, right? Things such as their revenues, their cash flows, their net income, things of that nature. And with Amazon, we're not talking about 2-3% growth. We're talking multiple double-digit growth in pretty much every single aspect and division of their company, which is pretty incredible to think. I've also said this before, but Amazon happens to be my number one stock in my portfolio as an individual position for a longer term hold. All right, so with the company's Q2 earnings out of the way, let's cover a couple elements that I think are really important to keep in mind here regarding why I believe Amazon is such a phenomenal company and their stock is attractive from a valuation standpoint. First of all, let's consider the fact that Amazon was for a very long time a company that burned through millions upon millions of dollars each and every quarter and was nearly unprofitable for the first 2 decades of its existence. But now that the company has such a strong foundation with their e-commerce business and distribution network, it has started posting positive net income figures, and management has also been placing a much larger focus on increasing their cash flows. So even though revenue estimates may have been missed for this past quarter, leading to the stock tumbling in the short term as traders offload shares, this really has nothing to do with how the company is actually performing under the hood from a financial growth standpoint, and this has led to the stock becoming even more attractive from a valuation standpoint. First of all, take a look at the stock's PE ratio following this recent quarter's earnings. So as of right now, Amazon's PE is roughly 57.8x, making this the lowest PE the stock has seen since 2009, not counting the fact that the stock did not have a PE at certain moments from negative earnings. This is because even though the stock is trading near all-time high market price, the company's earnings per share have been skyrocketing since 2017, now that the company has really set in as being a dominant retail leader, and I don't see this stopping anytime soon. Essentially, Amazon's earnings per share have been increasing at a rate that is outpacing the simultaneous increase in share price, and that's something that is positive to see, as over the long run, as Peter Lynch would put it, a company's market cap and share price really tends to follow net income growth. And finally, another interesting chart to look at for Amazon is the fact that even though this is a low margin, high volume business, their gross, operating, and net margins have all been steadily increasing over the past decade. So the bottom line is that although Amazon stock has tumbled, this was actually a fantastic quarter for the company, and as a shareholder, I'm happy with the company's performance. With that said, Amazon is the type of stock that I believe one should only invest in if you are looking to hold it for at least a minimum 5-year period, as this stock has proven to be quite volatile for holds of less than 6 months because investor expectations in the short term are quite high, which inevitably leads to peaks and valleys, such as what we're seeing with Amazon stock. But really, I believe that if you're holding this stock for at least a 5-year period, you really cannot go wrong here. Make sure to let me know what your thoughts are though on Amazon stock down in the comments. All right, moving on to the second stock that desperately needs an update, since the stock has just been getting hammered month after month and does still remain one of the larger positions in my own personal portfolio. We have TruLeaf Cannabis, ticker symbol TRUL in Canada, or TCNNF in the United States. And by the way, for those of you who have asked me in the past, it is now available on Wealthsimple Trade. I just thought I would mention that. But TruLeaf is a stock that, man, even though I do have strong conviction in this company's future and their financial growth has been nothing but fantastic over the past couple of years, it is still not pleasant to see a company in your portfolio shedding off 10, 15, maybe even 20% of its value depending on where you got in at. And so, I really wanted to give an update on what I believe the future of this company holds as of right now and what I'm doing. So taking a look at their stock chart here, we can see that the stock peaked at right around $67 in the Canadian market and has just been selling off ever since, to a point where it's now down roughly 40% from its all-time highs, which is significant. And I can understand why many people have sent me messages asking me what's really going on here. And although this ultimately does not matter, I'm in the exact same boat here, down significantly on my TLRY position, and I'm really just trying to remain an investor here, sticking to the logic behind why I invested in this company in the first place, and that is their underlying massive level of financial growth. I've also purchased chunks of this stock on the way down in the $40 per share range, and as it stands right now, I believe that it is showing quite a bit of value. If it drops below into say the $35 per share range, I'm just going to continue buying more and bolstering my position for a longer term hold. Once again, probably around a 5-year minimum hold for TrueLeaf stock. So TrueLeaf actually just posted their Q2 figures this morning, and I had the chance to sift through them when I was waking up sipping my coffee. So let's actually take a look at the most notable elements. Right off the bat, the company managed to post revenues of $215.1 million for the quarter ending June 30th, 2021, which continues their streak of increased top-line figures quarter over quarter and is actually about $21 million higher than the first quarter of this year, which is massive considering that that's roughly an 11% revenue jump since the prior quarter. That is an insane amount of top-line growth for TrueLeaf this past quarter, and really comes down to an increased customer count through higher exposure of their brands after penetrating into new states to operate in. In terms of net income, the company posted their best ever quarter with profits of $40.9 million, which continues this streak of increased profitability since early 2019. The company is very well managed and continues to impress me quarter over quarter, especially in contrast to other companies in the same industry. EBITDA figures for the quarter are also the highest ever posted at $94.9 million, which blows previous quarters out of the water. So really, I'm not too surprised by this type of growth for TrueLeaf. It's right in line with what I was expecting considering past growth quarter over quarter. And although market price is stalling right now, this ultimately has no real correlation with how the company is actually performing. This is something that as an actual investor and shareholder in a company can be hard to cope with in moments like we've been experiencing, but needs to be remembered because for a company growing at this pace and managed this effectively, it's only a matter of when and not if the stock will rebound. In fact, in the past year, the stock has had a significantly higher PE ratio at a market price even in the $30 per share range, which we can see from this chart. So right now, the lower the stock goes, the more attractive it actually becomes from a value standpoint. Ultimately though, what's going to allow TrueLeaf to continue sustaining this level of growth is going to come down to two main elements. The first one being a growing actual market of cannabis consumption in the United States, along with their penetration of new states and markets in order to sell their products to more customers. And that is exactly what the company has been doing. In the past quarter alone, they've continued acquiring more dispensaries in Philadelphia, bringing their total dispensary count in Pennsylvania to a total of now 6, and they actually started their operations in West Virginia also as the first medical cannabis company to start operating in this state, giving them first mover advantage. And most recently, they got a new license to sell products in the state of Georgia, making them the first cannabis company to get this approval, which will give them a huge first mover advantage in this state that is also growing in size. On a separate note, we've also been seeing lots of insider buying exclusively over the past year, and this is a great sign to see. As Peter Lynch would put it, insiders selling could mean a whole bunch of things, but buying exclusively means that they are bullish on the company's future growth. The only insiders selling over the past year was actually Thad, that we can see right here, that on my birthday sold $16 million. That's a pretty nice payday, but that was at a $26 per share price range, and even still, he retains 11.24% of the company. Furthermore, in complement to the past growth that we've been seeing for this company, TrueLeaf is expected to continue growing their top and bottom lines quite healthily over the coming 2 to 3 years, which is always something that as an investor, I keep an eye on, as I like to see companies I invest in showing signs of growth. This is only natural. Now, we should also keep in mind that this stock actually trades on the OTC market in the United States. And so for this reason, large institutions don't really dabble with companies and stock, really their stock that trade on OTC markets. So when and if we do see full legalization on a federal level in the United States of cannabis, well, this should have a dramatic impact on the amount of volume and liquidity for these cannabis companies if they're able to uplist to a larger exchange like the NASDAQ or the NYSE. Finally, even without the company uplisting in the near future, analyst estimates have price targets that are quite healthy for the next 12 months, which considering the current trend right now might seem far-fetched. However, I do think that we will see a reversal in this stock over the next 12 months. It would only be natural considering how aggressively this company is growing. So with all that said, what have I been doing regarding this stock? So as I mentioned earlier, my position in TrueLeaf is also down quite significantly. I'm pretty sure last time I checked, it's written down around 12% on average. As the stock has been continuing to sell off, I have actually bolstered my position quite recently in the past couple of weeks at around the low $40 range, and I increased my position by around 10%. Right now, though, it is a pretty large portion of my portfolio, so I'm trying to wait a little bit to see where the stock is going to stabilize. The fact that this stock is selling off so aggressively, though, I think is just a testament as to how the general public is selling out of their shares simply on price action alone. There's really nothing coming out about this stock that is negative. Every single thing that's coming out about this company is positive. At least that's how I see it. If you have anything that you think I might be missing, make sure to let me know down in the comments. Of course, though, make sure to fully understand the scope of risks associated with holding this type of stock that doesn't have full US legalization right now, and so that could impede on growth moving forward. However, I just think if you're going to be holding it for a longer period of time, this is a stock that is showing so much growth that the market price should follow. That's pretty much going to wrap up today's video, though, going over updates of 2 stocks I personally hold in my portfolio. I hope you enjoyed it. If you did, make sure to smash the like button. It really helps the channel out. And also subscribe and check out all the other videos that I have on my channel, going over topics like stock market investing, real estate investing, and general personal finance. I'd also highly encourage you to check out all the links down below to resources I use and recommend, like different stock brokerages, savings accounts, and other awesome products that you can get some free money for signing up. So on that note, thanks a lot for watching today's video, and I will see you in the next one.